Well, welcome. My name is Jason Watson, and we are here with Quentin Leighty, First National Bank of Monument, and this is our Bourbon and Business series of podcasts. So it's very exciting. We're here at the Axe and the Oak. They're very gracious to open up early for us so we could film and record our podcast here. I'm the managing partner for Watson CPA Group. Now we're called WCG Incorporated, and again, this is our business and bourbon series. Quentin Leighty is the vice president of First National Bank. Is that correct? I don't have your whole bio memorized.
President.
President. I just downgraded
skip the vice there.
Yeah. So tell us a little bit about what First National Bank does. And
Sure, I'd be glad to. Thanks for
Yeah.
having me. This is pretty cool. We're a Colorado-based community bank. We've got about 22 shareholders, so we're privately held, and we've been doing business since 1901, so since before the Federal Reserve existed. So been doing it a while, but we specialize in small business lending, agriculture, consumer lending we do as well. We've got 6 offices, soon to be 7, with Flying Horse going strong right now, so that should open in January. And I'm the CFO for the whole bank, and then the market president for Monument and Flying Horse. So I do balance sheet management for the whole bank, risk management, pricing strategies, all that good stuff. So.
Great. And for those who are listening or don't know where Monument is, that's just north of Colorado Springs. So, and Quentin and I are going to be neighbors. We're going to be what, quarter mile from each other?
Yeah, that's right.
Yeah, that was accidental. So tell us a little bit about community banking. Of course, we have the big banks, and we're familiar with all that stuff. What about the community banking? Why is that good for us, and why is it good for banking?
Sure, and as you can imagine, I'm passionate about it because community banking is what my family's done for quite a long time, and I just think it's a healthy thing for the community. We've got a multiplier effect, so we take those dollars, those deposit dollars that come in, and we reinvest them right here locally. It doesn't go to Wall Street, it doesn't go out of area, it goes to your neighbors, your friends, other business owners in the area, and so we're keeping it local and allowing our local community to grow as a result of that, and keeping those dollars right here. The other piece is we're a relationship-based model. So instead of having like a matrix that everything needs to fit in, we really can custom make products and services to meet the unique needs of our customers. We're a small business too, so we've got 80 employees, and it's taken us 120 years to get there.
Right.
And so we understand the unique challenges, and so there isn't a one-size-fits-all strategy for us. And so even within CPA firms like yours, you're not going to look the same as one of your competitors, and so there might be a product that is a good fit for the industry, but then you need some tweaks for your unique situation, and so we can help with that.
Yeah, no, and I can totally attest to that. I'm also one of your customers.
Right.
So, yep, the relationship is what drew us to you as well. And I'm a small business owner as well. We've been in business for 12 years at WCG. We have 27, 28 people who work for us. So we're both small business owners, and yeah, it's nice to be able to bounce things off and build a relationship from the business perspective. Absolutely.
Yeah, and I think hopefully you feel this too, but the quick decision making. So I think what I've learned over time is small business owners and managers, they need real-time quick decision making, and they need to know, even if the answer is no, they need to know quickly. And so that's one of the things that can separate us too, is we're not going to lead you down a path and then 2 months later you're going to find out, oh, we actually can't do that. We're going to make a quick decision, and you're going to know, because you are dealing with decision makers at a community bank.
Yeah, no, I agree 100%. I've experienced that too, and seen you done that, where it's no with a comma. It's no, not today, but someday when these things line up, yes. And I don't think you get that with big business banking. I think people just say, no thanks, and they move on. They turn the page. So, that's awesome. What are some of the community stats? You sent me a whole bunch of really cool things, and tell me some of your favorites.
Yeah, so it's something we're proud of. Is community banking is unique to the United States, and so we've got over 5,000 charters within the country.
So no other country does it the way we do it?
No, most countries have 2 or 3, a lot of times state-owned, or the national government owns those, like think of China or some of those areas. We have over 5,000 charters in this country, and so it allows us to really customize and handle a unique variety of scenarios, but it also creates an industry that's not as systemically important or challenging. And so, during the downturn in 2008, 9, there were community banks that failed, and they should have failed because they took too much risk in a certain area, or they were just over concentrated in a geography. And it allows for a system where it doesn't take everyone down, or at least that's the hope, right? So we would like to see the community banking space grow more, so that's even a larger piece. But some of the stats that we are 99% of all charters in the United States, so community banks make up 99% of that. We do 80% of all agricultural loans. Our bank started in agricultural markets, and so that's something that continues to be our bread and butter, and something we're proud of and do a lot of. We do 60% of all the small business lending in the country, which is a big deal. Over 750,000 employees are employed by community banks.
Okay.
And one of the big things that we talk about, because a lot of people don't know, we pay taxes, credit unions don't. And that's one of those things where, we help our community, but we also help by paying taxes, and that's an important piece.
Yeah, absolutely. Tell me, when do you tip the scale from community to, let's say, regional, multi-state? I mean, are there different buckets or gradings to put yourself into?
There are some rules of thumb, but I've seen large banks act like community banks and really feel like a community bank.
Okay.
And I've seen little banks really want to be a big bank feel, and so it doesn't apply to everyone. But generally about 10 billion in assets kind of kicks you up into that next level of a regional, and you can follow that up to maybe 100 million, and then it's getting to be a pretty good sized bank beyond that. And then really there's about 4 large institutions that make up the lion's share of the asset base within the country, and those are all over $1 trillion in assets. So there's a huge difference in a business model of $1 trillion bank than like in our case, we're a $380 million bank.
Okay. So does that always, or I shouldn't say always, that's a big word, but do the number of locations affect how big you are, or could you have one location be $1 billion?
I mean, that's changing. So you can. There are specialized banks that have maybe a big office in a large metro area, and they can get really large scale out of one spot. Most need to have a retail base that have offices.
Okay.
But with technology changing like it is, bricks and mortar, we're kind of unique in the fact that we're building an office right now. A lot of you'll read in the paper, a lot of the big banks are closing them down and scaling them back. I just heard of one today locally that's closing down. Just they have enough saturation and they don't need that location. So that is changing, but I think the largest banks that you'll see are going to have a lot of retail locations.
Okay. So tell me, how do you so how does community banking and all that market itself towards business owners? How do you get out there and get yourself known? And
we just, we get so involved within the community. So we're on school boards, we're involved at our churches, we're doing things locally to help the Chamber of Commerce do better, and really word of mouth. I mean, we don't have the big marketing budgets like the big guys do. We don't have all the dollars behind those campaigns. And so really it's just being out in the street with our neighbors, rubbing elbows, and hopefully getting referrals from good customers and sending people our way. It's not something we try to take to scale. We're not a Walmart of banks, it's really customized service, so it's slow and steady.
Okay, so with that customization too, do you find certain banks are also specializing in certain industries? I mean, you said you sort of grew up on ag a little bit. Do you still specialize in that? Is that still a lot of your bread and butter?
We do. I mean, that is definitely our top business line and something that we love doing. Our presidents of our offices are all ag guys themselves. They all have a cattle herd or into horses or you name it, have a farm. So it's important. But I think most of the successful community banks that I've seen, they do pick a niche and they go after it hard and they do it well. They don't try to be everything to everybody. They try to really understand the clientele they're going after and have the staffing in place to handle what they're looking for, versus trying to cover everything from wealth management to small business, real niche type products. So
no, it's difficult. I mean, CPA firms are similar.
Sure.
We specialize in small businesses. We specialize in people that are under 50 employees. We do have some larger clients of ours, but that's just because they grew out of their basement or garage and they kept us on. There's been some people who've just knocked on our door and never left until we signed the engagement agreement, and sure, we'll be your CPA firm. But no, same thing for us. I think it's just good we'd rather be the experts at a couple narrow things than to try to be all things, all people. And
You bet.
sounds like you're similar to that as well. So
Well, it sounds like too you. One of your favorite things is when someone does outgrow you, right? I mean, they get so successful and so
Yeah.
huge that they need something even larger. And
Right.
what a great story. I
it
love
is.
when that
No,
happens.
it is fun to watch people, and you've seen all kinds of relationships develop and blossom. I'm sure you got some good stories of someone who came to you a decade ago and you gave them a little bit of money on a loan. It was a little risky, let's say, but it fit within the guidelines and all that stuff, and they took that and they grew it, and it probably makes you proud.
So it keeps me going. Yeah, I love that.
Yeah, exactly. Well, I'm going to wrap up this segment. Next time that we come on, we're going to talk about how to qualify financially. I think that's a big deal. We have tax returns versus financial statements. Should they agree? That's a miracle. We'll talk about some of the basic business lending options for our listeners and our viewers as well. And then we're also going to kind of discuss the comparison to SBA lending as well. So that's going to be our next segment. My name is, again, Jason Watson with WCG Incorporated. We're here with Quentin Leighty from First National Bank of Monument. We're on the Business and Bourbon series of our podcast, hosted by Axe and the Oak, and we appreciate their graciousness, and we'll talk to you guys real soon. Thank you.